Hello, my name is Helen Com and I'm the product director at LEAFIO.
And I am Jeff Sward. I am the founding partner of Merchandising Metrics here in the USA.
And today we are going to discuss the current retail landscape, the essential merchandising metrics, the data-driven strategies, the open-to-buy merchandising, and how to implement all this into like the current processes of the retail. So let's dive in it.
Okay, let's go.
Today we are going to discuss rather important and interesting topics. Currently, our main aim is to understand the current state of the retail landscape, some essential merchandising metrics, so the data-driven strategies, of course, open-to-buy merchandising, and practical implementation of the merchandising metrics and strategies based on these metrics, and the implementation of the open-to-buy. If you don't mind, of course.
Of course.
Okay, great. So my first question will be regarding the latest retail trends. So to start, let's talk about the current retail landscape. So Jeff, can you please share your insights on the major trends of the modern retail? How do you see that?
Well, there's, of course, so many moving parts to the business right now. The way we see um, data and tech and, so much digital integration into the business that just wasn't there a short time ago. And, we're still recovering from the pandemic and all the supply chain issues that gave us. But now that that's all settling down a little bit, I guess my observation would be that um, there are still too many retailers that don't seem to have been able to get a sufficient handle on their own data so that they plan their flow and their season ending inventories in a manner that is optimal for profitability. So even with all the talk about data and digital integration of all the tools that seem to be available, so a lot of retailers, and I speak mostly from the context of apparel retailing. So there's a lot of apparel retailers that don't seem yet to be able to sufficiently plan and execute flow so that by the end of the season, they're really where they want to be, which is minimal inventory from the prior season and really well positioned for the forward season. It's a lot of progress that can still be made there.
Okay. And how do you think, what kind of solutions or what kind of decisions can be made to help them to overcome these issues with the data and the lack of digital integration?
Well, to my observation, when I look at retailers at the end of the season, and again, I'm looking at stores. I'm not looking at data. I'm not looking at Excel spreadsheets. I'm looking at stores in real life. And to my eye, what I see is that the stores, and typically with way too much of what I would classify as fashion or trend inventory. And and it's not simply because they didn't get the fashion right. Um, Again, to my mind, it's because they probably fell in love with what they did early in the season. They bought too much of too many SKUs, and they simply couldn't chew through it all. So, I think that the process needs to be indeed not just make the speech, but make the whole process more data driven and use the information that the end of the season is saying as much as in season, meaning when you study what didn't sell in any given location, it's kind of silly to go back and repeat that mistake time and time again. And I think what I like about, well, for instance, the LEAFIO approach is that, you use a word in your process that dovetails perfectly to my way of thinking, and that is clusters. You talk about clusters of product and stores. I talk about tiers of risk and shelf life. And that's really the same thing. When you try to aggregate product into clusters of similarity and aggregate stores into clusters of similarity and look at what then doesn't sell by the end of the season, it ought to be pretty simple to go back and not repeat that mistake the next year. But too many retailers seem to be making that mistake season after season, year after year. So I just think there's a huge room for improvement there, with just embracing a more data-driven point of view, which is not being critical of the design. It's meaning that they've got a much better opportunity to do better editing, better curation, if you will.
Mm-hmm. Thank you. It is a very nice example, the clusterization of stores and SKUs. And let's take this example and talk about that a little bit more. So LEAFIO, we are using the machine learning for making these clusterizations, as it can seem rather simple to just divide all the range and the stores into clusters according to their similarity or according to the same demand behavior, or according to some other factors that can be relevant in these cases. But in real life, it stands out that it is not so simple and not so obvious. And we are covering that with the help of the ML. So what, from your point of view, what is the role of AI and machine learning in modern retail, in terms of retail operations, in terms of supply chains management, and some other spheres maybe where it can be relevant? Is it, from your standpoint, is it rather a hype or a situation that is obvious for everybody that yes, we will probably increase our profits, margin, and etc. KPIs while using the machine learning or AI in general?
Right. Well, I think that yeah, I think part of the key is to not overcomplicate it in the very beginning, is to take it a layer at a time. For instance, when it comes to clusterizing stores, that if you simply make at the beginning of the process a differentiation between the northern tier of stores versus the southern tier of the stores. And in the USA, we have a little bit bigger climate um, difference between northernmost and southernmost, so that especially when you're planning fall and winter, you've got to be very aware that the needs of an A store in Boston in October are very different than a C
Sure.
store in Miami in
Sure.
Boston. So that might take a whole lot of machine learning to do, but the simple fact that you've clustered the stores in a very simple manner, but then there can be all the gradations in between Boston and Miami that can break down and refine how the clusters operate. So I think it's a question of using the data in a manner that starts with simple breakdowns and then gets more in depth and more complicated as you get more comfortable with the different levels of data. But at least start with some level of clustering and understand that there's nothing that can be done with a cookie cutter approach anymore.
Mm-hmm. I agree totally. But if talking about the category level, not the overall company or the overall stores, but in terms of category. Sometimes we see that when we start making the clusterization, when we want to drill down into the category levels, we understand that the demand behavior can be really different, and it stands out that we have hundreds of clusters that it is not possible to manage them manually or with the help of the Excel spreadsheet. So how do you see the influence on the quantity of categories to the complexity of the using of the cluster analysis?
Well, I think here I'll introduce what I call the scorecard thinking. A scorecard is a template, if you will, that is based on prior season's data that takes into account all of the variables that you're talking about, which could be hundreds of clusters. And it understands that there are ABC stores in the north and ABC stores in the south. And there are suburban stores and city stores. And, what actually sells in each of these different clusters is different enough that they have to be fine-tuned in that manner. So just like AI and machine learning has to be fed with data, the scorecard has to be fed with enough historical data that going forward, AI can help populate that scorecard and give direction to what each of the different clusters will be optimized with. So I think there's just a lot of efficiencies and time savings that AI can lend to the process. But like any other AI model, it's got to be given the right template to begin with. And
Absolutely.
that's what I call the scorecard.
Absolutely. Yes, I agree. Okay. And the next trend or the next, how to say, observation that we are currently having in retail sectors is the increase in the e-commerce and slight decrease in brick and mortars. So in 2017, the new term was introduced like the retail apocalypse. So what do you think about this trend? What do you think about the death of classical brick and mortar retail? And how many years do we have until it will die? If it will die, of course.
I think retail apocalypse was a mechanism by which to grab headlines and make everybody crazy, which is not to say we haven't experienced an enormous amount of change. And the simple fact that e-commerce has siphoned an enormous amount of sales dollars out of physical retail is not an apocalypse. It's an evolutionary moment that we just need a reality check. Okay, I'm not going to get the same sales per square foot per store that I used to. And oh, by the way, in some markets, that means some stores are going to close. That's just the hard realities of the math of the business right now. But at the same time, I think there's this pretty huge recognition that physical retail is where the customer really develops their bond with any given brand or retailer. It's what makes it real. And it's physical retail that gives the customer the confidence to go shop and buy online. So, once I develop a favorite retailer or a favorite brand, and I really know the product and the quality and the fit and the value, well, my comfort level for then buying online is huge. And therefore, I don't return a whole lot.
Mm-hmm.
But if I ever decide to get experimental and, try a brand where I really don't know the quality or the fit then, I think that's where there's some hit and miss factors going on. That's not an apocalypse. That's a simple evolutionary moment in the business. It's just that that moment is going to last for several years. And I don't know where the pendulum will come to rest on what percentage physical versus what percentage e-commerce. And I don't think that number is even important. I think that, right now, I think most people think that physical retail is essential to, again, giving people the confidence to shop online. So it's a question of the brand of the retailer executing, with that whole kind of unified commerce, if I can use that term, as their operating model. It's not one versus the other. It's all of the above, but it's not an apocalypse.
I agree. And it is everything about the customer experience that the customer can get while, for example, trying something on in the physical store and afterwards maybe choosing the same thing or another color thing that was absent in the store, in the physical store online, and vice versa. But regarding the customer experience now, so the increase in e-commerce, increase in social commerce, that is really increasing trend when people are purchasing via the social networks. The very crucial thing here is the delivery, and especially logistics and delivery, and especially the same-day delivery trend that we see the huge increase in the necessity of the same-day delivery throughout the whole world, in Europe, in Americas, in the United States, in Asia, even in Africa. So what do you think about the same-day deliveries, how it is impacting the business as it really increases the cost, and what is the future of that?
I think same day delivery kind of revolutionized the way both retailers and customers think about um, shopping and buying and but that doesn't mean I think it's altogether a healthy thing. I think same day delivery or even next day delivery is really the mechanism by which I'll just say Amazon kind of, or now any e-commerce individual, establish themselves as the go-to place where in the beginning, next day delivery was unheard of. But if you pay a subscription fee, then all of a sudden next day delivery is free.
Mm-hmm.
And even though you paid a subscription price, so the delivery isn't really free, the word free began to be used so freely, but it developed this mindset of, oh, I just go to my computer and I get it next day for free. Well, not really. Um, but it changed the attitude of how people think about, all of their shopping habits. Um, and I think the other lesson we're learning now from some of the newer e-commerce businesses is that they offer very inexpensive product direct from the factories, but it takes 2 or 3 weeks. And they're proving that people are very willing to wait those 2 to 3 weeks in exchange for this incredible value price.
Mm-hmm.
So I think everybody's learning that, free next day delivery was huge. Well, now all of a sudden, 2 to 3 weeks is okay if the price is right. And, the bottom line of it was all that delivery was never free. The return rate on some of that business was astronomical and absolutely profit killing. So even now, Amazon has introduced, very modest return free fees. but it's their way of saying, oh, wait a minute, everybody, we can't keep supporting the level of returns that you're giving us. And even to the point where sometimes they'll say, you know what, just keep it. It's less expensive for you to keep the item than for us to take it back and reprocess it. So I think delivery and how retailers, whether they're brick and mortar or e-commerce, and how they offer it and manage it is going through this its evolutionary movement of its own, where what used to be the world's best customer acquisition tool turned out to be a great tool, but at a huge cost. And that huge cost isn't sustainable. So, the pendulum is coming back now where the whole value equation of the price paid for the item plus the delivery equation is going to reach some new equilibrium. But
Mm-hmm.
it's been, we've learned the new expectation is next day delivery for free, or today with some modest, delivery charge. And that's not going to go away. We're just, going to continue the evolutionary process as we go along here.
If not considering so huge players like Amazon, for the smaller retailers, the logistic cost for the same day delivery can be very significant if to compare it with the total logistic cost, let's say. How it is influencing, how this trend, or other words, habits of the customers that are supposing to receive the same day delivery is influencing SMB business?
I think, Amazon has the benefit of a whole different business, their Amazon Web Services division, which makes so much money that Amazon can afford to lose a little bit of money on
Yes,
some of their
exactly.
delivery mechanisms. Most businesses don't have that luxury. They can't. They just can't.
Yes.
So this imposition of the charge that they do is really just an attempt to play a role with the customer to compete, but they can't lose money in the process. They don't have the same luxury, the same efficiencies that Amazon does. So, and like I said earlier, even Amazon is now starting to charge, some very modest fees. So again, I think it's moving from being a customer acquisition tool to now the playing field is leveling and everybody's trying to figure out, well, how do I be in the delivery business and be part of the customer's consideration for their shopping, but I have to charge for it. I have to at least break even on the delivery part of it and make some money on the product part of it. Very tough equation.
Yeah. Okay, so if you don't mind, I will summarize the first block of today's our talk about the retail trend and the retail landscape. I think that we probably can talk about that for the next couple of hours, but we are limited on time. That is why I will summarize. So we were talking about the digital integration and transformation of the retail businesses, and not all the businesses, unfortunately, now are on the curve of the using of the data in a proper manner, collecting this data, and building their decisions based on the data. Secondly, like an example, we were discussing the cluster analysis, like the analysis that can help retailers to be more data-driven and data-oriented in terms of their decisions, especially in terms of inventory management. How not to have these huge inventories by the end of the season, or by the end of the expiration date, or by the end of the some particular period of time, depending on the retail vertical. Also, we were talking about the customer experience and the role of brick and mortar retail, e-commerce retail, the trends, the percentages of the shares that are gaining from e-commerce and offline retail. And as a conclusion, I can say that it is like the normal state of the development of the market. So, of course, it was influenced by COVID a lot. I mean, the development of the e-commerce, but at the same time, it was going the same way. The more people are using the mobile devices, internet, the more, of course, they tend to make the online purchases. But at the same time, they still receive this customer experience in brick and mortar retail. And we don't see how the e-commerce will substitute the brick and mortar stores. Okay, so the next block, the next topic I want to arise now is the metrics for merchandising. So how do you think, what kind of metrics are crucial for effective merchandising? Could you please explain the key metrics from your experience?
Yeah, sure. I guess first, let me give you my definition of merchandising. I think most simply said, merchandising is a fusing of planning and design. It's certainly not pure number crunching. It's certainly not pure design. It is informed design. It's design with consideration for both great storytelling, but also profitability. So I think it's really important to understand that merchandising is not just, going into the store and making it look nice. It's the statistical analysis of past performance and what that would suggest for the future. But it's also from a pure design and creativity point of view, what the designers see as forward trends. Never mind the historical, because trends come and go. And it becomes the judgment of the design team about what trends are diminishing and what trends are incoming. And historical numbers won't tell you that. But so there ends up having to be a fusion of both the planning and the design process. And that's not so much about specific metrics as understanding just what level of teamwork is involved to be able to make that happen. But then to jump into metrics, I immediately go to well, I'll use your term, clusters, and the establishment of clusters of product that reflect levels of risk or levels of fashion, so that you start with basics and then key items and then fashion and then trend. And, breaking apparel content down into those four levels and treating each of those levels separately in terms of just how much breadth and how much depth they'll each get. And then, of course, the further refinement of that is north and south. And the further refinement of that is ABC stores. So and the management of all that is what creates the scorecard that I was talking about earlier. So it's building this conglomeration, if you will, of clusters, and how the clusters get populated that formulate the merchandising process.
Mm-hmm. But in terms of the key performance indicators, despite the fact we are managing the clusters, when we are dealing with 4 different level of risks by your definition, and for example, different levels of clusters in terms of stores, which creates the metrics for some amount of clusters depending on the risk and stores. But at the same time, what kind of KPIs, what kind of metrics for efficiency will give the top managers, commercial directors, the understanding whether they are going forward in towards to their aims or not?
Well, I think the key specific metric then is weekly sell-through, because each of the 4 clusters of risk is probably going to have a different expected rate of sell-through. Basics will sell through slower than key items. They're going to sell through slower than fashion or trend. So you plan fashion and trend flow based on the fact that you have an expectation of anywhere between, I would say, 8 to 12 to 15% a week sell through, as opposed to basics and key items, which might only have 4 to 6% per week sell through. So understanding that each of the clusters has very different expectations for sell through rates is part of what drives it. They also are going to have very different expected rates of maintained margin. Basics sell a lot slower, but they don't have any clearance markdowns. So they're going to have a higher maintained margin rate. Fashion and trend sell through at a much higher rate, but they also have a much higher markdown rate. So as a group, fashion and trend are probably going to have a lower maintained margin. And it's being able to establish the different metrics for the different clusters that will drive the in-season management of how slow selling product is dealt with. For instance, if you have something in the fashion and trend area that's only selling through at 2% a week, you got to mark it down now. You
Yeah.
can't wait until the end of the season.
Mm-hmm.
If you've got a basic selling through at 8 to 10% a week, you've got to increase production now because you weren't planning on that level of sell through rate.
Yes.
So it's really understanding how different the metrics can be by cluster level that that brings focus to the whole process.
Mm-hmm. So it is like one point of vision when we are talking about the sales through and the margin. It is more about the category management, about the commercial things, more like even the S&OP process. But on other hand, we have the costs, the logistics costs, the inventory cost. So what kind of KPIs are relatively important in terms of their tracking, in terms of clusters or in terms of general situation in the company or in terms of categories? How do you think?
um, well, I think that there always needs to be overall inventory level considerations, that there needs to be a cap of some kind that it all goes to the open to buy process. But I think that the single biggest consideration is, from a very macro point of view, how the open to buy process is managed from establishing a macro expectation. You know, at the top of the pyramid, is the business expected to grow 2% or 20%?
Hmm?
Or are we in the middle of a pandemic and the business is going to shrink 20%?
Mm-hmm.
Because all of the other factors need to be derived from that reasonably predictable macro expectation. So I think it all starts with um, the setting of, for the entire business, whether it's a small specialty store or, a giant mall anchor department store. It's keeping the boundaries on the open to buy and inventory levels that have to be done to keep the business in control.
Mm-hmm. So we will definitely talk about the open to buy a little bit further in the fifth, if I'm not mistaken, part of our interview. But now, what about some of the experts I'm talking to, some of them do believe in GMROI and they are measuring and they understand that, like, we need definitely to understand the GMROI overall in the business on the category level. So, and they are driving the business based on that. And some of them do not believe in GMROI because like other factors are more important from their perspective to manage the retail business. What is your point of view from the standpoint of the GMROI? Do you believe?
Yes, I do. And really, the metrics I mentioned earlier of weekly sell through rates very quickly translate into GMROI. Um, if you've got the weekly sell through rate that you expect to get, then your GMROI is going to be satisfactory. But if you're not meeting that weekly sell through rate, then you're going to have a problem at the end. And the problem will only get bigger if you wait to take the markdowns. So in the very beginning of the process and throughout the process, the weekly sell through rate is telling you what to do. If the weekly sell through rate is meeting expectations, then you're on target to hit the GMROI you want to hit. If it's
Mm-hmm.
exceeding expectations, you're going to do better. If it's not meeting expectations, you simply have to start taking markdowns. And unfortunately, you're not going to hit the GMROI expectation that you had. But waiting to take the markdowns is not going to change that. So that goes back to what I said earlier about the end of season inventory problem. That if, it's like retailers were somehow waiting and hoping that things would get better. Well, they don't. The customer is voting every day, every week. And in a bad situation, you get the best GMROI possible by taking the markdown as early as the customer is telling you to and not ending the season with all that excess inventory.
Mm-hmm.
Because if you still own it then you're going to be selling it at 60 to 70 to 80% off. Sell it at 30% off. Sell it at 40% off. That's how GMROI is maximized in a difficult scenario.
I see. And what is your advice to the retailers in terms of understanding or analyzing the period of data when they need to decide that already, yes, we really need to make some clearance sales or markdowns because like to maximize the GM ROI. What are your thoughts here?
Well, I guess I would say again is, the customer is talking to the retailer every day, every week. And if there might be some obstacles to taking markdowns, it used to be that somebody would walk around with a little sticker gun and literally put red stickers on price tags on individual garments.
Okay.
Now, what the retailer wants to do is they just want to put a sign up on a fixture that says 40% off. everything on the fixture. And I guess my advice goes back to somehow, some way that markdowns have to be taken at the most surgical level possible. That there might be three colors in a style that are performing great and one color that is performing horribly. Just mark down the one color. Don't put a sign on the whole fixture. That's a problem in physical retail. On websites, I see this all the time, where there might be a whole series of like items, and there might be nine of them, nine plaid shirts, but only two of them are marked down. Well, that's because the customer has spoken, and the retailer can go onto a website and just mark down the two of them, and that's easy. So the implementation of taking surgical markdowns in a physical store, that's really difficult. But somehow it's got to be done. Otherwise, the retailer is just throwing away margin dollars.
I agree here. And furthermore, we with our solutions are currently even helping our customers to, I liked your expression, urgently how identify which particular SKUs need to be marked down and which particular SKUs, if it is possible, of course, need to be withdrawn from the range because they are not performing well and they need to be changed by another SKUs. Of course, depending on the retail vertical, for example, in grocery, it is much more easier to make this decisions based on the data because you clearly understand the expiration date, you clearly understand the trend of and the dynamics of sales, you clearly understand and can build a demand forecast, and by comparing like the days of coverage and the expiration date, you clearly understand that you probably will not sell all the quantities for the particular SKUs during the remaining shelf life of the particular SKU. So it is a bit easier. But at the same time, in apparel retail, we also have the so-called expiration date, the end of the season. So it's pretty easy to build the expectations whether it will be possible or not to sell this SKU, and we may need to make the managerial decisions whether to relocate, to make the markdowns, to if it is possible to make some kind of clearance sales or the returns to the suppliers as earlier as possible. I agree totally with you here. Okay, thank you very much. And our next block and segment will be about the metric-based merchandising strategies. We were discussing like the different metrics, the metrics about the sales through, metrics about that the sales through needs to be managed on different levels in terms of clusters, in terms of risk levels, depending on the business. But when we are talking about the strategies, what are your suggestions? Can you please share your experience about the particular strategies that are based on metrics, that are based on data from your experience?
Yeah, of course. Here's where I would go back and revisit what I spoke about a little bit earlier, the scorecard. The scorecard is a process whereby all kinds of analysis has been done on historical selling information in all the clusters that we've talked about: North and South, ABC stores, suburban, city. And the scorecard, by my definition, is meant to be kind of an assignment, if you will, that is given by the planning organization to the design organization by the merchants. The merchants are kind of bridging this whole process. And it's really the planners saying, hey, I've crunched all the numbers and this is what seems to make sense to me in terms of what the forward looking expectations are. And the designers can come back and say, well, yeah, but, that
We want
category over
more.
there is, huh?
We want more.
Right, right. Well, to that point, the scorecard is meant to give the design team some boundaries and guidelines because designers love to design, and they tend to just churn out one great thing after another. But the scorecard tries to help everybody understand how much is enough of a good thing. In other words, the scorecard helps assemble the portfolio of product that goes into making up the total. What percentage of the business can be basics? What percentage of the business should be key items? And then in fashion and trend, the other way of asking it is how much risk do I really want to take on? And in all my years in the business, I never looked at fashion often enough as risk. Everybody got into the design process and the editing process, and all the fashion was wonderful and great and fabulous and terrific, and everybody loved it. And the mistake you make in that emotional process is over assorting into high risk product. So the scorecard is meant to say, oh, wait a minute. We over assorted last season. Now let's understand that even in our best stores, there was only X level of appetite for this higher risk product. So we have to build a portfolio of risk levels that understands the way customers out there actually think and behave. Because customers think and behave differently than we do in the design room. So that's real life. That's what everybody's prepared to buy. Let's let the scorecard give us some guidance about, how much is enough of a good thing. And yes, designers do find that frustrating because they will typically want to design more than the scorecard calls for. But um, it also helps everybody just focus on the combination of great storytelling and great profitability.
Mhm. So you're describing rather a classical, how to say, a conflict between the designers and plannings, between the plannings and category managers, between people who are focused and motivated on different things, and it creates some kind of conflicts between them. From your experience, how do you see how to overcome such kind of conflicts? What title or what kind of person does the company need to overcome these conflicts and to make everybody happy, to align these two things, the production and or the designing or the sales, with the planning people who are responsible for cost mostly?
Well, I think that boils down to simply the head merchant's job is that the head merchant, their whole job is to, I'll use the word fuse again, is to
Mhm.
fuse the planning and creative processes. I express it very simply as, data plus design, but um, most planners know that the plan alone isn't going to win the day. And I won't say most, but some designers know that it's not as simple as just designing wonderful stuff and putting it out there. They kind of know that they need each other's talents to to succeed in the long run. And to me, the very simple mechanism is you get everybody together on a weekly basis. It's the weekly bestseller meeting, and you put everybody in the same room with 11 racks of samples and the data, and you review it. And by the time you throw all the bestsellers up on one wall and all the worst sellers up on another wall and just talk it through, everybody can sit back and go, oh, okay. Because, designers don't sit down and say, I think today I'm going to do the worst sellers. And today I'm going to do the best sellers. It has to unfold over time. So the Monday bestseller meeting process, however the retailer manages it, is really just crucially fundamental to the whole process, because it brings everybody together. They all look at the same product and the same data at the same time, and they can talk about why. Why was that a bestseller? Why was that a worst seller? And it's out of that comes the ammunition that lets the planners go back and refine the numbers, that lets the designers go back and design into the best-selling criteria. And as frustrating as it might be, they have to understand that the worst sellers, well, they thought it was good stuff, but it didn't work. So, okay. And weekly the process just moves along, but it's jugular to the whole process.
I see. Okay. And the thing that can be relevant during this discussion about the strategies, the merchandising strategies, is the particular business model. So if to simplify that, we have the mid and premium price segment, and we have mid and low price segment. So for the premium segment, let's say, they are more focused on the margin, and they're less focused on the inventory turnover, on the cost of stocks, and etc. And on the other hand, when we're talking about the discounters, and especially hard discounters, all of their focus is on the cost. Of course, the sales is important as for each and every retailer, but due to the low margin, they are more focused on the activities that can decrease the cost of logistics and like the general cost, operational cost, and everything else. So from the perspective of these different retail business models, how it will influence the implementing or like the understanding how it is better to work with the merchandising strategy?
Well, I think the beauty of both my model and your model is that the clustering of the business works at both extremes and in the middle.
Mm-hmm.
Every retailer, whether they're opening price point, lower margin, or upper price point, higher margin, everybody wants to make money. So it's the managing of the clusters that gives everybody the best opportunity to do that. It's just that the lower tier of the business, the opening price point retailers are
Mm-hmm.
probably going to be more risk averse because they have lower margins to begin with. So they're not going to get very adventurous at the fashion end of the spectrum. The upper end of the market, to your point, has the built-in higher margin opportunity, and therefore just has more room to take markdowns at the end of the process.
Mm-hmm.
And at the upper end of the spectrum, customers have an expectation that they're going to be kind of wowed in the process of shopping there. There's a whole different level of expectation between shopping for apparel at Walmart than there is at Neiman Marcus. There's just no comparison. So, the higher end with the higher margins, they simply have to take the higher level of risk because that differentiation is indeed what separates them from the rest of the market. And I always say that actually, for all that I talk about risk, I never talk about eliminating risk. I talk about managing it. Risk is a brand's best friend
Mm-hmm.
because it's a differentiator. So you don't want to eliminate risk. You want to put in just the right amount of risk at the right time, at the right margin, so that as a brand, you're differentiating yourself from the rest of the market. And that's much more difficult at the lower end of the market than it is at the upper end of the market. But then so are the expectations at the customer level. They just don't expect as much at the lower end of the market.
Okay. So, as a conclusion, we were talking in this part of our discussion, we were talking about the merchandising strategies and the strategies based on some KPIs and metrics. So we were talking about the scorecards and the alignment between the planners and designers or planners and category managers in terms of non-apparel retail and their alignment with the help of their equal understanding equal understanding of the same processes, of the same data, of the same operations. And with the help of that, everybody can understand whether we are getting our goal, whether we are going straightforward to our aim or not. And if not, we need to make some adjustments into our strategy, but based on data, based on scorecards. Okay, so our next topic will be the open to buy in merchandising. So can you please explain what is the open to buy and why you choose this approach in fashion retail?
Well, we mentioned it a little bit ago.
Yeah.
Open to buy, I think, is really the last step of kind of fitting all of this great product development into a very specific grid, if you will. And I said earlier that, the open to buy had to be predicated on what is truly realistically predictable. What kind of expectations do I have for the business 3 to 6 to even 12 months out? Because the time and action calendar for apparel product development can be anywhere from weeks to sometimes a year out. So you've got to have an expectation for right now, we're sitting in July. Well, I need to have an expectation for what's realistic for me to expect in the summer of 2025 for me to be able to develop the right level of product and then specifically buy the right amount of product. So the open to buy at the macro level and then how it gets backed down into the category and classification level and then down to the SKU level is really paramount when it comes to not overbuying. It's got to be I just always come back to it's got to be realistically predictable to be manageable. It takes the whole process of kind of open-ended development. The scorecard gives it boundaries, and ultimately the open to buy gives it specific purchases at the SKU level. So it's just this ongoing process of getting more and more finite.
And how to ensure that you have mentioned that it must be predictable and it must be manageable. That is why it is important to have the open to buy. But how to ensure how to say, the predictability accuracy or forecasting accuracy when we are talking about the open to buy approach, from your experience, of course.
Well, that's actually one of the best questions of all. So again, back to the cluster level, basics, key items, fashion, and trend. The predictability of basics and key items is huge. That this year's data on basic and key item products is excellent to very good in predicting next year's demand. Because again, we're sometimes talking, 6 to 12 months out. But at the SKU level, this year's selling data on this year's SKUs is not going to be very helpful in predicting the performance of next year's fashion at the SKU level. So at the open to buy, in the open to buy process, what you end up having to do is to say, well, I might not have predictability at the SKU level, but I think I've got pretty good predictability at the category level, at the cluster level. So I'm going to give this cluster 12% of the open to buy, understanding that any given SKU in there, I'm not going to have much predictability on. But at the basic and key item level, I am going to have good predictability. So basically what I'm saying is that just like product has shelf life, so does data. Data has shelf life. This year's data on basics and key items is good for predicting next year's performance. In fashion, you might have a couple of weeks to a couple of months of shelf life to the data. So if you've got last week's best sellers and you can replenish them from the factory in 8 weeks, well, that's fabulous. You can replenish in season. You don't have to predict a year out. You can manage the business in season. Not many apparel businesses can do that. So it's recognizing the cluster level and the predictability, the quality of the data at the cluster level, and what kind of predictability it really gives you at the cluster level. So this whole cluster level of thinking is just, it's so important in how the business sets its expectations and manages its forward look.
Mm-hmm. You have noted a very important thing that not all the retailers, not all the apparel retailers are able to make the fulfillment during the season. So usually they are preparing in advance before the season starts, and afterwards you don't have an opportunity to make great adjustments. You can make the internal replenishments, of course, but at the same time it is costly. But to make the standard process of the replenishment from the central warehouse or from the external supplier is not always possible. So how do you think, what kind of advice can we give such kind of retailers, how to switch to the opportunity to make these faster decisions, to make the changes and to make the fulfillments and the deliveries on a more frequent way, to ensure that even if our level of predictability is low, at the same time, we have an opportunity to make these adjustments based on the real data?
That becomes a very pure conversation on supply chain management. And it's all about the level of partnership that the retailer is prepared to enter into at the factory level. Yeah, it's at the factory level. I'm not talking so much about transit and DC,
Okay.
but it's the ability of a design and merchandising team to come up with a new idea, implement it, test it, get it manufactured in a timely basis, to get it on the floor, and then respond. So whether it comes by boat or by airplane, there's a difference there. But rather than operate on 6 to 9 months of time and action calendar, if you can operate on 4 to 8 weeks of time and action calendar, that's huge. And I have found that what that takes is it means that, again, you've got to go back to the design team and say, well, look, the design process can't be just totally open ended and you design whatever you want. That if we take the design process and focus it on these core fabrications, then the factory can stockpile those fabrications and trims and all the other necessary, parts of the garment. And they, rather than start from scratch every time we get selling information, they tap into existing inventories of ready-made fabrics. Now, not every category can do that.
Mm-hmm.
Knitwear is especially flexible because they can stockpile yarns, and the manufacturing process can very quickly turn yarns into knitwear, into garments. So it's a process I refer to as platform merchandising, because the platform is the raw materials. So you start with the raw material end of it versus starting with the design end of it. It's a very different way of looking at the whole thing, but it can dramatically alter the way that a factory responds to a retailer's rate of sale.
Mm-hmm. And from this perspective, we all know a great example of Inditex when they are managing this very frequently, very flexibly. So what is their secret?
I think the secret is that they kind of built this process up from the ground level from day one, as I understand it. They took a look at, the basic apparel time and action calendar at the very beginning and said, that's easy. How can you operate an ever-changing business on a 6 to 12 month calendar? And they built some of their own manufacturing facilities,
True.
and they have deep, deep, deep relationships with all of the factories they do business with. And my understanding is that they fly an enormous amount of their production from factories to stores. So they've made it their mission from day one to operate on the just knowing that it's crazy to try to predict, especially women's fashion, on a 6 to 12 month calendar. There was an American retailer that operated on this basis back in the 80s and 90s. It was the Limited. They were unbelievably customer driven in that
Mm-hmm.
regard. But as different retailers got bigger and bigger, factories just said, "Well, I need more time and more time. I've got to get raw materials. I've got to get trim. I've got to, you know, factories want predictability. Factories live and die on efficiency. They just want to have a smooth run of product going through their building day in, day out. They can't have idle time, and they can really only go so fast. So it's not like they can speed up and slow down. They just want this nice, steady stream of production going on. So the way Inditex approached it was a huge ask of themselves when they built their own factories and of the factories that they ultimately partnered with. But they did it. And they succeeded, I think, fairly hugely in the process.
Yes, yes, I agree. So, if to make a conclusion, the first thing that is really important is to manage to make your business predictable and manageable. And to make it predictable and manageable, sometimes you need to somehow shorten the time of reaction. And when we're talking about um, shorting this time of the reaction, we are talking about the lead times, we are talking about the decision making, we are talking about everything. And as an example of Inditex as the successful retailer with a very quick reaction on the changes in the market and the decision making inside of the company. So the main things that lie behind their business is, first of all, you have mentioned, and I liked it, they understood that they wanted to do that from the very first day of their existence. Secondly, they have deep relationships with their partners, let's say partners with the factories, with the suppliers, I assume logistics companies, and all kind of partners they work with, and they have fast logistics. So their aim is to make it as fast as possible. Okay, so thank you very much. That's it, I think, in this blog. And to finalize, I think that it is one of my most the most adorable topics. It is about the implementation of the strategies. So we have talked a lot about the trends, about how the retail business is changing, about how to measure the efficiency and how to build your strategy based on some kind of metrics in terms of the efficiency. And now, what are the secrets of implementation of such kind of solutions? Because even if you are extremely intelligent and clever inside of your brain, it is really extremely hard to implement everything that is inside of your brain to your company, for the people to understand why you do need to do that or this. So what are the secrets? How do you think?
Well, I think the first observation I'll make is that I'd have to highlight just how everybody needs to recognize how deeply collaborative this process needs to be. The business cannot operate in silos. It is to me, this amazing example of teamwork. I know that sounds like a cliche, but that's what it boils down to. I referred to earlier of, the number crunching can't do it alone. The design can't do it alone. The Monday bestseller meeting process. But the other part of the process is, I think all of these people, planners, designers, merchandising people, is getting out from behind their desk and getting into stores, talking with store people, understanding at the most intimate level possible, what's going on at the store level on the selling floor. Because I think the root of it all is to constantly try to answer the why question. Why does this work and why didn't that work? We thought it was such a good idea when we were sitting in our corporate office. Why didn't it work? So drilling to the why um, means that it just needs to be this highly collaborative, get out from behind the desk, visit the field, talk to people, um, visit the competition, by the way. The competition has smart people working for them too. So what are they doing right and wrong? It's this constant learning process that just never ends. So I think that once everybody understands just how collaborative it really needs to be, and if the head merchant is fostering that kind of environment, then I think the pieces fall into place.
Mhm. And what about the project management approach? Sorry, about the rules, the standard rules of project management that helps to implement each and every project. So how this approach can really help in implementing of the strategy?
Well, again, I think that's it's a process. It's an ongoing process of the sharing of ideas and pressure testing those ideas. Um, Project managers, in my mind, are not uh, dictators, if you will. They're they're learners and facilitators. They're trying to glean from everybody, everything there is to be learned about a specific project and bringing it all together and disseminating it back out again. So project managers, um, really can't have an agenda you know, other than learning. Um, they've got goals, they've got KPIs, of course, and all that. But really good project managers are really good students of what's going on in the business. They don't pretend to know it all. They're always anxious to learn. And then turn that around into teachable moments for the rest of the organization.
Mhm. We had an interesting example lately with one of our customers that is like a good example of what you're talking about. So we are responsible for managing the promotional activities and for forecasting of the promotional activities for the grocery retailers. And the promotional activity is like extremely important for them as it influences everything. It influences the customer loyalty. It influences the sales. It influences the logistics costs. So pretty everything. And the preparation and the handling of the promotional activities. It is a topic that touches each and every department in the retail organization. As they are preparing for that, and they are preparing on the operational side, the store managers who are responsible for the price tags and the layouts and everything. Of course, the supply chain is preparing, as they need to ensure these increased quantities in place of each and every store due to the forecasted quantity. Of course, the marketing team who need to prepare all the materials and the advertisement. Even financial department, of course, is involved. So the commercial department, so pretty everybody. And they are involved in the preparation, but unfortunately, there is no process. Usually, we don't see the process when they sit all together after the final day of the promotional activity. And when they are discussing the problems, the issues that arose during the promotional activity, how we did finish the promotional activity, what are the issues regarding the availability, regarding the cost of stock, the days of stock, and etc. And by implementing such kind of a process, a lot really started to be different. So a lot of changes took place there because they really started to understand each other. So before that, it was an interesting story that commercials, they were saying that the logistics is not working at all. The operational department told that the commercial department is not working at all, and they were just like arguing between each other because they didn't receive great results as the end of the promotional activity. So I deeply agree with the deep collaboration and the situation when we do have the organizational silos, and we need to eliminate that. That's absolutely
Absolutely.
Thank you very much for your time and efforts. It was extremely interesting and extremely insightful, and hope it was enjoyable for you as well.
It was, Helen. Thank you. I really enjoyed it, and all the best to you and LEAFIO, your whole team.
Thank you.